In May of 2020, FreightWaves Live is headed back to the largest freight market in the Southeast, Atlanta, Georgia. Join FreightWaves for our best event yet, featuring captivating keynote speakers and rapid-fire demos of technology that is sure to take our industry to the next level. This is your opportunity to interact with some of the most innovative leaders as we mark a new decade in transportation. See you in Atlanta May 5th and 6th.
It's Monday, and that means another week of FreightWaves Now. I'm your host, Anthony Smith, and coming up, we're going to have Luke Velasca talking to the brokers. We also have Mike Bodendistel with a shipper update, but first, a word from Zach Strickland with a carrier update brought to you by Powerfleet. Stay tuned.
Hey everyone, and welcome to another Monday and a carrier update presented by Powerfleet. So, tender volumes continue to be flat-ish, so we're not really seeing any significant declines, but over the last couple of months, we can see here's the peak season right here, right around November. We had peak volumes right around Thanksgiving. They have fallen roughly 10% to this point now, but it's been a pretty steady decline. I think this would come as a surprise to most people operating in the space because you feel this capacity reduction significantly more. That's why we have our tender rejection index to tell you just exactly what that supply-demand situation is. So volumes, demand is really not declining super fast, but it is still going down slowly over the past several weeks or so. So what does that mean for the market conditions in terms of capacity? So today I wanted to focus more on a region versus the entire country, but you can see that we do have a pretty good mix of blue and red across the eastern half of the country. The west continues to be relatively volatile up here in the Pacific Northwest. Los Angeles, Ontario market is starting to come down a little bit more. Softer conditions there with the weighted rejection index creating that dark red value in the Ontario market. But I want to pick on Atlanta, for instance, this week. So Atlanta, you can see, is super tall. It's the biggest market in the country right now, with roughly 4% of the total outbound market volumes coming out of it. But you can tell it is super red. So this red indicates on the weighted rejection index a softening or loosening situation versus this time last week. So last Monday, we were a little bit tighter than we were right now. So Atlanta market is the hub for the Southeast. So what that means is a lot of the freight originates here and it goes into other Southeastern markets. You have a lot of regional freight here, a lot of regional carriers, but you also have a lot of inbound. And that's what's creating a lot of this oversupply situation in the Atlanta market today. So I want to give you another few options. So we talk about the weighted rejection index quite a bit on this show now, and I wanted to show it to you on a chart, but I want to show it to you in relation to how you can use this to basically identify other better areas, especially in times where the Atlanta market is starting to fall off a cliff like we saw over the last few weeks. So you see the weighted rejection index right here. The Atlanta market is in the mountain in the dark blue, negative 4.57. That is a pretty soft signal for a market. You see the Birmingham and, the Nashville and the Charlotte market here are both showing positive signs. Now they're not going off the charts. This isn't a huge blowing up situation, but we've got Nashville at 0.47 and Charlotte at 1.2. An indication that both these markets are tightening a little bit, not dramatically over the last little bit, but it is a much better situation for these markets than the Atlanta market, which is kind of the market that carriers will go into just blindly. So you get a load request going into the Atlanta market, and you tend to just say, you know what, there's a lot of volume there. I need to go ahead and just accept it blindly or whatever. But you might have another opportunity sitting in Charlotte or Nashville or even Birmingham, anywhere else in the Southeast right now. If you remember our map of the Southeast, we had some blue positioned around the Atlanta market. Those are going to be a little bit more opportunity coming out of those markets versus this time last week. So the Charlotte and Nashville markets are a little bit better chances of finding some freight here in the near future. So just to give it in perspective here, outbound tender rejection rate. So you can see 9.3%, 6.2% out of both Charlotte and Nashville. So You're seeing tightening conditions over the last few days coming out of these markets. Atlanta continues directionally to soften at 4.34%. Now, volumes are not going to be extensive out of either of these two markets. Charlotte is a little bit bigger, but rejection rates going up indicate increasing opportunities for carriers out there to find some freight on the spot. So make sure that you don't just ignore and get lazy in your habits going into some of these bigger markets just because they're bigger, for big's sake, I should say. So here's the Atlanta market broken down in terms of length of haul. So one of the things that's creating a problem with capacity loosening is the long haul outbound tender volumes are on a decline. This is going to make this market a little bit more prevalent with the short haul, mid-haul volumes, which come back into the Atlanta market, capacity not reducing as rapidly out of that because of this. So, you know, you see over here in our short haul outbound tender rejection index, this is the part that's getting the most, it's getting the tightest over the last few days. So make sure that you are going into Atlanta market and knowing that you're probably going to have a lot more trouble getting out of it. And that'll do it for today's Carrier Update.
The comprehensive logistics offerings from PowerFleet cover in-cab ELD, fleet management, trailer tracking, cargo monitoring, and tracking other assets such as chassis and intermodal containers. Power up your operations with PowerFleet.
Hi everyone, I'm Luke and I'm bringing you another broker update. All right, let's take a look here on the chart behind us. So as you know, we've been taking a look at the tender rejections quite heavily. That's this line in blue here behind us. So we've seen that massive spike up and drop off since the holidays, everything we expect, but it seems like we've found our floor. We're sitting at about 7.65%. We've been floating in that like 8% to low 7% range here for the last week and a half now. So that's typically what we're going to call our floor for right now. We'll see what happens as we continue to take a look, but not a lot of change. Same thing, look at the volume levels. That's the line in orange. You can see over here we're sitting at about 9,600, just over on the index scale. So again, remaining very, very flat since we've recovered from that holiday dip. So everything here from rejections to volume levels have remained very, very flat. All right, so as a market as a whole, not a lot going on. Now that's okay because there's a few things that we can do to find opportunities in a flat market, and we're going to talk about that. Before we get to that, let's take a look here on this map. This is our money map or our call map for today, right? So the markets in green are going to be markets that are experiencing the greatest increase in volume over the last week. So shippers are beginning to push more. So in those really dark green areas, you're talking about anywhere from a 6 to 15% weekly volume increase in those markets, meaning there is more opportunities to ship. So those are great places to focus on your calls for today. So really up here in the Pacific Northwest, you're seeing in Washington, Montana, Idaho, a lot of green there. Also down here in the south west area of Texas along the border, it looks like even Laredo, El Paso, some of those areas are experiencing a lot of growth. Then a little bit kind of just scattered throughout here the eastern half of the United States. So if you're focusing sales calls today, look at different southern parts of Texas, the Pacific Northwest, some areas here in kind of the middle of the country for potential opportunities. Then also down here in the coastal area of Virginia. Today we're going to be taking a look at Cleveland, Ohio. It's seen a lot of movement over here the past couple of weeks. So this chart over here on my left is the dry van tender rejection percentage that we've seen. Look at that. We saw a massive spike and then it just fell off of a cliff here over the last couple of days after the holidays, and it is still falling. We saw here it tried to recover up to that 6% range and then fell back down. Again, we're sitting at just over 4.5%. So if you're moving freight out of Cleveland, Ohio for driving, drop your rates from day over day. Okay, you're going to need to continue to push down carrier rates in order to create margins as that market continues to soften. Now this chart over here to my right is the reefer outbound tender rejections out of Cleveland, Ohio. So again, very volatile. We're sitting just under 6% right now, so pretty low for reefer, but it is that time of year when reefer demand is fairly low. But you'll also notice it fell off a cliff as of just a couple of days ago. So if you're moving reefer freight out of Cleveland, Ohio, no movements over the last couple of days, but from last week, a lot lower. So continue to push those rates down as well. Now we've got one more chart here for you. This is a shout out to all of our brokers running asset divisions as well. So we've got a brand new chart for you guys today. This is our forecasted next day fuel prices. This is the change day over day. So this is the forecasted change of what is going to happen tomorrow. All right. So what this map measures is in blue the change in cents per mile for where the forecasted rates for fuel are going to be tomorrow. So blue indicates an increase and red indicates a decrease. So if you do have asset divisions in your brokerage, be sure to look to refuel in some of these red areas tomorrow. I'm Luke, and that'll do it for your broker update today.
Voices from every corner of the supply chain concerning all modes of transportation. From the world's largest logistics podcast network, this is what the Freight Tech Revolution sounds like. Freightcast presented by FreightWaves. Subscribe now wherever you get your podcasts.
Welcome to your shipper update. I'm Anthony Smith, and I'm here with Mike Bodenistol. Mike, what do we have for us today?
So we had some companies report earnings last week. We had CSX, Kansas City Southern, and J.B. Hunt. And one of the big takeaways for me is that we really shouldn't expect to see a lot of intermodal volume growth, at least early in 2020. And I think this chart, really illustrates why. And the green line is the truck spot rates, and we saw this, spike up in December. It was a pretty good December, but a lot of that has really come down, and this blue line is intermodal spot rates. So really showing those, the highway and intermodal really close to parity. So there's not a lot of reason to ship intermodally when you're not saving any money. The shippers right now are demanding to have intermodal service that's just as good as truckload, right. But they're still expecting lower lower rates, nevertheless. This next chart shows, okay, really in the last year, how has intermodal done relative to, long haul truckload, and so we have the orange line is outbound tender volume index for long haul, shows that up about 8%. Intermodals, this blue line shows that is down about 5% versus a year ago. The overall outbound volume index is somewhere in between. So the intermodal volume has lost some share to the highway, which is really different than what we've become accustomed to over the last several years.
Right. And so when we're looking at intermodal, what's happening with the rates there?
So with the rates in intermodal, really the contract rates for the following year tend to follow, what the spot rates, did during the last peak season. Basically during the last peak season. So this past peak season was a muted peak season. So the contract, rates, which are going to get negotiated, this spring, this February, this March, expecting not, terrible, rate increases there. If we're talking about what the intermodal companies are going to, get from the shippers. But the railroads, on the other hand, the railroads still expect those intermodal prices to go up for their customers.
Okay, interesting. And what do we have up here?
So what we have up here is, some justification that the railroads will cite for having their intermodal costs increase to someone like a J.B. Hunt or a Hub Group.
Gotcha.
And these are train speeds, and you see those train speeds for intermodal just keep going higher and setting new records. So they're getting those boxes across the country, faster. CSX also talked about the other day its on-time performance, which was about 95% to the hour. Now that's an internal metric, so it's hard for us to sort of verify that, but they're talking about how great the service is. But you sort of go back to what J.B. Hunt's saying, and they're saying, well, their customers still want less prices for intermodal just because it's intermodal, and that's how it should be.
Right. And so one of the things you mentioned is we had releases last week. Mm-hmm. What are some of the things that we're looking forward to this week? Yeah,
so this week, it's really the two big releases that I'm going to pay attention to are Union Pacific,
okay,
so the big Western Railroad, and GATX. Union Pacific, their volumes were down about 11% in the fourth quarter, so down quite a lot. Their headcount was down actually more than 15%, so they're actually doing less with even less. Another thing that I would just point out is this chart is the lease rates for various types of rail cars. Now we're going to get get an update from that on that from GATX, the big rail car leasing company. And kind of interesting that tank cars have held up better than these other car types. And actually, at last data point, they spiked up. I think that's a function of shippers and railroads really demanding the tank cars with the latest safety features. So we'll get an update on that later in the week from GATX.
Excellent. Mike, thank you so much for that insight. And thank you so much for tuning in for this for this Monday edition of FreightWaves Now. That's going to do it for this edition. So be sure to check us out on all your favorite social media platforms. We're posting around the clock. We're also available on all your favorite streaming platforms like Apple TV, so check us out there, and we'll see you on the next episode.